So the major currencies are in pretty tight ranges ahead of the Fed's Jackson Hole, Wyoming conference that starts today with the main focus, obviously, Fed Chair Yellen's speech tomorrow on Friday. We're looking at the markets really sort of seems to be anticipating something coming out of this, but is it much ado about nothing? I think there are high odds that we don't see a whole lot to go on in the short term from the Fed. If the focus from the market is on whether Yellen tips her hat at the likelihood of the next Fed rate hike, I think we'll be sorely disappointed. And even if she does, I don't look there for the big market reaction beyond the next few sessions. The key here is the Fed's long-term signaling on policy and how it will mean the dollar reacts to incoming data down the road. That is, the Fed seems to be disenchanted with monetary policy's ability to move the needle. That's from recent reports from other Fed members. I think Yellen will confirm this. It may not mean much for the market right now, but it has profound implications as we see data rolling in, because it could mean that, for example, if U.S. data becomes a lot weaker, the Fed responsiveness could be less than we would have anticipated under the earlier days of the global financial crisis, Bernanke, QE, etc. So I think that's the longer-term signaling here is what we should be looking for. Also for the longer term, as we are waiting for something to happen, for something to break out, the other big event we're waiting for is the Bank of Japan on September 21st. We have the market stuck in these these summer doldrums, and I think some longer-term plays looking at an expansion of volatility is what traders might ought to be looking at as we're frustrated with the ranges and a lack of trends. And a couple of those, I think there is a risk of another 5% of downside or so in dollar yen, but I think the upside potential far outweighs that as eventually the Bank of Japan does bring helicopter money into play. Elsewhere, I think the Kiwi is vastly overvalued. Sure, Kiwi dollar, if the dollar is weaker after this Fed conference, could weaken another few percent, but I think the asymmetry, if we're looking out on the 6-month horizon, of the downside relative to the upside is quite remarkable. As well, we see cable testing towards 125. So these are some long-term ideas, perhaps testable via the options market, that one might consider if the market continues to trade in these ranges, and especially if we get a disappointed reaction to lack of short-term developments for the dollar on the Fed's Jackson Hole, Wyoming speech from Fed Chair Yellen.